Stear, head of research with Societe Generale, joins us live now from Hong Kong via the Skype link. Guy, good morning. Thank you for joining us. It's all about risk on trade, Guy, I guess, because suddenly money managers are convinced that in the short term, worst of the fundamental print is behind us.
I think you're right. I think, as one of your earlier guests mentioned, the change in the leadership at the Fed has helped push out the idea of when tapering will come. And the second issue has also been that with the uncertainty about the U.S. budget process and the fact that there's so much budget uncertainty right now, that probably has meant more scope for monetary easing, or at least a perception that we could see tapering being pushed out further.
So, Guy, would it be fair to assume that tapering is only going to come next year?
Well, right now it's very difficult to tell because we still don't know exactly what's going to happen in terms of the U.S. budget discussions and what impact that will have on growth in the fourth quarter. Our feeling now is that tapering is most likely to start at the beginning of next year. I think that the beginning of tapering is not the only question. It's also what type of tapering we're going to have. Because we could see a situation in which the Fed comes out and says, yes, the beginning of tapering will be further off in the future, but when we start tapering, we're going to taper an awful lot more quickly. So you shouldn't necessarily assume that the end of QE has really changed all that much. That's also one uncertainty which the market is facing at the moment.
So, Guy, do you think this current market rally, or current rally in emerging markets, is coming with an expiry date? And the expiry date is, let's say, 31st of December 2013, and come 1st Jan 2014, fears of tapering will surface up?
My suspicion is that it does come with an expiry date, but the expiry date is rather earlier than the end of this year. I think the first thing that's going to happen in terms of the emerging market rally is eventually when we get through the budget discussions in the U.S. and we end up with a clear lifting of the debt ceiling and we end up with a U.S. budget which will hold together and we'll have a clear insight into fiscal policy, then the next thing is that we'll get some statement from the Fed about clarity on how monetary policy is going to evolve. And at that point, if it doesn't look like monetary policy is going to be quite as expansionary as people think right now, I think that emerging markets will once again begin to dip.
Guys, so what is your view in terms of in the run-up to any sort of resolution, be it on debt ceiling or the U.S. government stalemate right now? How do you expect commodities, in particular crude, as well as the U.S. dollar to pan out?
Well, I think that the U.S. dollar is going to really be dependent on what happens in terms of monetary policy, and that will be a function of fiscal policy. So I think that once we see a clearer path in terms of fiscal policy, if that leads to a belief that monetary policy will actually be tightened a little bit earlier than people might be expecting right now in the great period of uncertainty about U.S. fiscal policy, then that probably means the dollar can go higher, and dollar gains will really be the determinant for how commodities as a whole react.
Do you think globally there is some degree of complacency which clearly has kicked in about how U.S. lawmakers will approach the U.S. debt ceiling issue? Developed markets are celebrating as if the debt issue is passé now, but clearly there is no deal on the table.
Well, I think complacency is probably too aggressive a word. I would say yesterday what we saw in the U.S. stock market was relief in that the negotiations are still going on, and the comments that we're getting from the politicians is that they are getting towards or getting close to a solution. What I sense in the U.S. is that the man on the street in the U.S. is quite angry about the lack of resolution on the budget ceiling. He's angry about the fact that budget discussions are being tied to the debt ceiling. What I think most of the U.S. population who understands the problem would say is, let's get the debt ceiling raised and then we can have the budget discussions afterwards. But let's get out of the immediate crisis period so we can start having a more rational political discussion. So in that sense, I think people are optimistic that politicians may act to raise the debt ceiling and then continue on the budget discussions.
Okay, good chatting with you. Appreciate you taking the time out and speaking with us.